Midcap basket. He holds Bata, Glenmark Pharma and Sonata Software. It's a rock-solid portfolio, but Ashish wants more.
I like the consumption story. I really do. And that includes for me FMCG companies, banks. So I definitely look at those sort of industries. Dividend yield itself is something in the range of 4 to 6% would make me look at it more closely. In my experience, capital appreciation in a good dividend yield paying stock has come in automatically almost. I mean, if you hold on to that stock, it's come through.
And that's where our experts come in.
A rock-solid portfolio indeed. Let's find out what Mr. Chokkalingam can do to better his portfolio. So we'll start off with the three large-cap names. Mr. Chokkalingam, what would you advise him to do on Kotak Mahindra Bank, JSPL and L&T?
Kotak Mahindra Bank, he should shift to Axis Bank because Kotak Bank is quoting at around 3 times book value, whereas Axis Bank is available at around 1.4 times. And Axis is growing at more than 30% its profit in the last few years. So I would suggest him to shift Kotak to Axis. And L&T and GSPL, he should hold on to them. GSPL has been impacted because of the adverse development in the Bolivian country. They lost about 600 crore. But I think sooner they would recover because this company has got huge resources of both coal and iron ore captively. And similarly on L&T also, he should hold on to the stock. Definitely the interest rate cycle would reverse, and L&T has got a lot of unlocking opportunities in terms of its subsidiaries, and it is already sitting on 3 times order book as compared to its sales. So you should hold on these two stocks.
Okay, hold a Jindal Steel and Power and as well as Loss and Tuber, but you could look at exiting out of a Kotak Mahindra bag. But Mr. Chokkalingam, a lot of the names that he's picked up, they seem to be at absolute bargain level. So he's got about 1,500 shares of IndusInd at 30 rupees a share, a Bata as well as about 1,000 shares of Glenmark Pharma at 70. What would you advise them here?
I would certainly suggest him to unlock money from Bata India. The market is always known for structural changes, so he should not stay invested for long because there is huge volatility. So he should shift Bata India to ITC so that whatever gains he has made, which is really phenomenal, he should be able to protect by investing in ITC. And Glenmark Pharma also, the story has played out very well. Hats off to him. Now he can think of shifting Glenmark to Vaith Lab. Compared to Glenmark, Vaith Lab is available at just 10 times its 1 year forward EPS. And there is a possibility of even merging this company with Pfizer. So I would advise shifting from Glenmark to Vaith Lab.
Okay, those are some of the changes that you can make for the rest of the stocks in your portfolio, Ashish. For Mr. Chokkalingam, what's interesting to find out is that he's been holding some stocks since the IPO times. So what do you think he should do with Reliance Industries and TCS?
Reliance Industries, definitely you should have sold long back before it crashed in the last 2 years. But now this is not the time to sell. He should hold on to it. Since he is a long-term investor, I would suggest him to hold on for next 2 to 3 years. I firmly believe that the stock has got the potential to double in the next 2 to 3 years. Particularly after April 2014, when the gas prices are revised, the company will unlock a lot of money from gas, and also it has the potential to unlock money from the retail business. So he should hold on. TCS, he can hold on in the short term because there is uncertainty regarding the reform policies. We are not sure whether the government would be able to implement them. If government doesn't implement any of these reform policies, then the rupee would fall very badly. In that case, TCS would give him a good protection. So he can wait for another 2 to 3 months and see what happens to the macroeconomic policies. If government is able to implement, then he can sell TCS and use the proceeds to buy some other value stocks.
Now, another software name that he has is a Sonata Software picked up during its IPO as well as an HCL tick. That blue chip, of course, has also been quite a bargain during its IPO days.
He can shift from HCL to Polaris Software for simple reason that when Polaris Software is available at around 5 PE, HCL is now quoting at 12 PE. For a retail investors, there is a great opportunity in chasing the mid-cap stock, which is not possible for the institutional investors. So you should make use of this opportunity. For another reason that there is a possibility of further consolidation in the mid-cap IT space. Even in Polaris, the promoter holding is very low. So if there is any consolidation, there would be definitely re-rating of valuation of all the mid-cap stocks. So I firmly believe that such re-rating is possible for Polaris because of the good management governance and also consistent growth in the profits. Recently they have grown the profit by 37%. So I would advise him to shift from HCL to Polaris Software.
Okay, so that's Mr. Chokalingam's advice, Ashish, on your entire portfolio. So let's take a quick look at all the changes and recommendations that he's made. To start off with, Kotak Mahindra Bank, sell that, buy into Axis Bank instead. Hold on to JSPL with a target of 500. Retain L&T with an upside of 1600. Innocent Bank, sell and shift to Karur Vysya Bank. Sell out of Bata India, shift to ITC instead. It's advisable to exit a Glenmark and you can look to buy Wyeth Labs instead with an upside of 1353. For some of the stocks you've been holding from IPO, RIL can see a target of 2 to 3 years at 1500. Hold on to TCS with an upside of 1400. Sonata Software, sell it and go on to BASF instead. HCL Technology is also advisable that you exit the counter and shift instead to Polaris Software. And also remember, for all of our viewers watching, that this is only a model portfolio which has been recommended by our experts. It's advisable that you do consult your financial advisor before taking on board any of the recommendations.
Okay, time for us to take a very quick break on the show, but come right back because we'll get you 2 trading and investment ideas from our experts in just a bit. Thanks very much for staying on with us on BNSN Weekend.
Okay, now time to brace yourselves for some investment as well as trading ideas for the next week. Mitesh Thakkar and G. Chokalingam are going to enumerate them for us. I'll start off with you, Mitesh.
Well, I've got a buy on TCS. That's a stock which is done extremely well. It is outperforming and the stock has closed on new highs. So can be bought with a stop at 1279 for a price target of 1400 plus on the upside. The other one is CEAT. We have seen extremely strong momentum in rubber in the tire stocks with the news that rubber prices have fallen. I think I would suggest buying TCS CEAT around the levels of 115. Keep a stop at 107, and I think the minimum price target on the upside is around 140. Possibly even higher targets can be achieved over here.
Okay, so you could look at buying into a TCS as well as tire major CEAT for the coming week. But Mr. Chokalingam, what are some of the longer term ideas that you've identified?
I would place 2 ideas. One is Karur Vysya Bank. This is 95-year-old bank and it's one of the most efficient bank. The net NPA is only 0.38%, which is very impressive. The most important exciting point about this bank is that in the last 10 years, when the business has grown 8-fold, its gross NPA in absolute term remained almost constant around 300 crore. Now, this bank has created a 17 times rise in the market cap for the investors in the last 10 years. I continue to believe that this kind of exponential growth in the wealth would happen in the year to come, and I would suggest this bank at the current price in the short-term target of around 25% upside. But people who can hold on till 2015 and 16, they can more than double the return from this stock. The second idea would be BASF. It's a German MNC. In the short term, one can hope to get around 13% return, but I would suggest the investors to hold on to 2 to 3 years. I see great opportunity for delisting of this stock for a couple of reasons. One, the parent company has got 73% stake in this company, and 2, recently the parent company has merged 4 subsidiaries belonging to itself with BASF, and also made a statement that the listed entity will be the single legal entity in India. And that gives me a lot of logical conviction that this stock can be ultimately delisted. Fundamentally also very strong. It's a chemical conglomerate. It's into all segment of chemical business in the country. And this company also posted about 36% growth in the profit. So fundamentally also very strong apart from the tactical opportunity from the delisting. So this stock, if a delisting happens, it should also give more than 100% return in the next 2 to 3 years.
Okay, so on the fundamental side, Mr. Chokalingam is advising a buy on Karur Vysya Bank as well as BASF India. Mitesh, if we talk about a strategy for the Nifty, given that we've lost out close to 0.5% for the week gone by, what would be your trading hypothesis going into the expiry week?
See, I think, in the last few days, it's been a market which has been characterized by the fact that dip buyers have kind of made money, and I think we should identify some important support levels. The range appears to me of about 100 points on the Nifty, which is 5350 to about 5340 on the downside. So buying near the range, keeping a 25 point kind of stop loss is what I would advise. And beyond 5420, 5440, I think that's the area to book profits on long positions.
Okay, thanks very much to Midesh as well as Mr. Chokalingam for joining in on the show and giving us all of that advice. But that's all the time we have right here on Buy Now, Sell Now Weekend. Thanks very much for watching. But do remember that these are the timings that you can tune in to the show.